All right, welcome everyone. Welcome to the trade findings and adjustments for the 16th, not the 14th, the 16th, Thursday morning of July 2020. I had a whole thoughts of trades and so forth, but I'm going to spend a half hour today, and I'm really going to focus on how to come out of a market crash stronger versus half broken. That is my focus today. This is going to be nothing more than a 35-minute pump you up practical application of not how to become an idiot or psychotic or suicidal through everyday simple market terms. I know a couple of you have looked at me and said, hey, is this what you expect? Is this what you want? How about this? How about that? The neat thing is, step number one, you have to choose and stand up for what you believe in. You have to choose and stand up for what you believe in. So there's step number one. That has to do with your own trading. That has to do with who you have trade your money. That has to be in regards to where you're trying to get to, your life goals, how to pay for those life goals, how to do the things that you want to do in life. There are some people that will say, I am taking too much risk for them. There are some people that will say, oh, this is too hard to understand. There are some people that will never get it. And there are some people that are okay with the standard quo of, hey, you know what? Go stick my money in some mutual fund bullshit, and I'm good with it, and we'll make it work on the other end. Wherever you stand, at some place, if you want to come out better, if you want to come out stronger versus half broken, you need to stand. You need to get your butt knocked down. You need to make a mistake in trading. You need to lose or have a big loss. The key is not how many big losses you have. It's how you survive and get knocked down and what you're going to do to stand back up. A lot of people have made the comment, Kevin, you don't spread trade as much as others. Why? If I was to ask you guys, what would you tell me? Why do you not spread trade as much as others? What answers could you? I want you guys to give me answers, but I love it. Lance kind of hit it on the head. Because you have real results, not paper trading or part paper trading results. Right. In all honesty, spread trading is really hard. Emotionally, I beat myself up on every losing trade. Emotionally, I take it out on friends and family when I'm angry. If no one has told you yet, spread trading is winning 51% of the time and losing 49% of the time, but to have those winners outweigh the losers. To tell you in all honesty, to have to be right more than you're wrong is really, really hard. And I'm one that will pile up on myself. If I let it, I will let the emotions and the anger and the frustration and the loss of money eat me away until I cannot stand up again. So what have I done that over a 23-year period of time has proven to me that it is the right way, that it'll make me stronger after market crashes, stronger after stock crashes, stronger after dealing with all the assholes in the world? I collar trade. Well, Kevin, there's 9 ways to skin a cat. That's true. And there are some really good cat skinners in the world. But not one that would take $1,000 cash and brand new $100 bills from me. As I did the math, I keep saying about 12,000, maybe 14 or 15,000, probably closer to 25,000 people that I offered that to see how they skinned a cat and to show me it could work 2 years in a row consistently. And you know what? I still have my $1,000 after all those money shows, after all those option animals and spread trade system coaching seminars and webinars. I look at my testing pool, and my testing pool has proven to me that I'm right. You know what else my testing pool has proven to me? Pretty simple. It's very hard, if not impossible, to time the markets. We hear this time and time and time again. Well, Kevin, you're guessing, you're timing the markets, you're using this and that. Of course I am. In some way, shape, or form, yes, you have to time the markets. But I'm trying to use protection when the probabilities, the law of averages, the odds are in our favor that stocks will fall by more than 10%. 90 some odd percent of the time it happens in earnings. So I'm protecting for that time period. Well, Kevin, I know there's some people that always have their stock protected. Well, you can't make any money. You should put your stuff in an annuity then. No, because they show great returns on their stocks. But they're going to show you great losses on all those long puts. They move it up every time you move it up one more strike price. There are people sitting here today that know that. I'm not protecting for the black swan events. I have been protected through some of them because we had earnings in the 2008 crash, and we had some protection on for the March dip, and we added some. But I'm not protecting for like the 0.5% of time that something happens. I'm trading for the other 99.5% of the time. That's where you make your money. Guess what else I learned? Adjusting can cause bigger losses and not make every trade profitable. I know some of you are going to say, duh, Of course, Kevin. Well, if you realize it, guess what? Allow your trades time to become profitable. If you know that, understand that if you have a process that gives it time to be profitable, you're going to be in really good shape. Kevin, you know what? You don't just give me a trade and tell me when to get in and out of it. My answer there, it's going to be an interesting one. My answer there is no shit. I'm here to teach you. You're not taught if I tell you what to do every time. You don't grow as a person, as a trader, as an investor, or your portfolio if I'm telling you what to do, if I'm posting your every single step. I'm telling you when I'm doing some of my things. I'm telling you how I'm doing some of my things. But you know what? I'm giving you the choice to decide exactly when you choose to do it. There's some of you here that have told me how much more you've made on a trade than I did. And that's awesome. There's some of you that have told me how much more you have lost on a trade than I did. That's just as awesome. In between that, you're going to find your risk tolerance, because believe it or not, the biggest problem with trading is that people think one size fits all. One size risk tolerance fits everyone else. One size return on a trade fits everyone else. Hey, I only go for singles and I'll get 100% return after 5 singles. Well, I'm glad you said that, because I've got an Apple trade for some people with a cost basis of like $2.30 or $8 that's going to make a tens of thousands of a percent return. I want to be greedy at times and make a crap load of money. There are 3 of you that are in Boeing that understand that today. There's 1 of you that I'm not quite sure, 2 of you that I could say maybe you each half understand it. And it's okay with me if you want to go somewhere else. This isn't for everybody. But you know what I do love about what I do? I love my job gets to treat people as people, not a number, not an inconvenience, not as a associate, but as a real person with real concerns. And each of you has your own story. I don't stick you in a group. I don't stick you in it and it has to be this way, it has to be that way. I don't stick you in, hey, it's going to be everyone doing this. I've got so many odd stuff from people who've done their own thing, but still let me look at it and see it, that I get to treat each one of you as a person. That I try to give you 3 times a week to hear my thought process, to see what's changed, to have access to me. I call you. I talk to you all the time. This is everything I hated about Vanguard. It's everything I hated about the big boxes, the Wells Fargos, the Morgan Stanleys, the Schwabs. I'm allowing myself not to grow so big that I can't treat people as people. I'm not going to let that happen with Hurley Investments, which means I've got to be willing to cut ties with people and tell people, you know what? It was fun while it lasted. Good luck. I feel horrible for doing that to a couple people already. It was in their best interest. It was in my best interest. You can't let the rotten apple ruin the whole barrel of apples. That's the beauty of getting and finding ways to stand back up. You know what the neat thing about it is? What we do here allows for real growth in people. And that real growth in people can be in trading. It can be in them learning how their money works and how it's managed, them learning how to do it on their own so they can do it on their own. It allows them to grow to become my friends. It allows me to have a track record where 6 of my original investors that are with me, in my opinion, are still with me. The one that's left died, so that's not fair to him. My original 6 are still here. When the average is there's a 25% churn rate, my original 6 investors are still with me. People that leave, I've gone as much as 4 years and like 3 months where no one's left Hurley Investments for any reason. That's unheard of. That's the business that I choose because it allows for real growth for real people. I know about kids getting married. I hear about brothers that have committed suicide as early as just this last Sunday. I get phone calls on size of fish, hunting, how you can tell if people are lying. I've got a gentleman here that I have called out to him for more conversations on. Okay, used to be a police officer, used to do this. You know, I'm pro Trump, I'm pro this, I'm pro that. I've got a friend that, well, I consider him a friend that I've met once for dinner with his beautiful new wife. That probably for a year, I was probably calling him more often than him calling me for getting his insight on everything from telling if people are, you know, how he tells people are telling the truth to what he used to do as a police officer to his political views, doing it for me, not for him. I'm sure I probably started out with, you know, your portfolio is doing this or that, but Bill, thank you. Thank you for that time when I could just know I wasn't the outcast in society. Simply, I'm not getting the word I want here. Let me just put it this way. To make it simple, Hurley Investments is more than just managing money. And that's what we're offering here at What We Do. We are offering the opportunity to Bill, I love you so much. We are offering the opportunity, and so I should put it that way, right? Hold on one second. We are offering the opportunity for protection in down markets, for friendship, for real life advice. And that goes both ways. Pretty interesting. I had a conversation with a gentleman yesterday. I never would have thought this gentleman had chosen to become, he wanted to be a lawyer. And not only did he want to be a lawyer, but he put 3 years of work into it. I wanted to be a lawyer, and I basically had it paid for. And what an amazing conversation I had, because I thought I was the only idiot that gave up a law degree, basically packaged there, a way to make some great money. Not that I didn't want to argue, because you know what? By nature, I'm a pretty argumentative person, I think. I love a good debate. I love putting people in their place. I know that's hard to believe, huh? Pretty amazing conversation to where I passed up being a lawyer because I didn't want to I wanted to shield myself from that bad side of society. Shield myself from prosecuting dirtbags who've done some horrible things in their life. I wanted to shield myself from hearing about all the broken marriages and just how bad people are to each other when they've had enough. I was lucky enough to cut bait and run before I put all this effort into it. Had an interesting conversation with someone yesterday or the day before on how he put 3 years into it and then decided, you know what, not going to be for him. He didn't want that life, but he still used the knowledge of that 3 years, whether he has the law license or not, to still then help out somewhere else. Talk about finding a new respect for someone and going, wow, that's unbelievable. What I'm going to say for seeing the amazing people that are out there in this screwed up world we get to live in. Bringing this back down to trading and everything. I'm not comfortable with placing any trades unless they are collar trades or protective puts on stock ownership. You notice I do a lot of leaps. I do a lot of leaps, not because of how much money I can make, but because of what do I do if it goes wrong. I don't do a lot of short-term trades where I don't honestly count in the cost of commissions. I'm not interested in making 10 cents that really is about a 45-cent loss. I'm looking at how to place a trade where I've minimized every or most of my losing opportunities in the trade. And I've got a game plan on if I've guessed wrong, how I can make it right again. A lot of you have seen that with Boeing, leap long calls. Damn it, Boeing should have been to 450, if not 500. Instead, it went to 96. We got crushed in some calls. Well, Kevin, couldn't have been easier to put long puts on. Well, yes, when you Monday morning quarterback, of course it would have been easier. Do I wish I would have done it? Of course I do. But just because it would have worked for Boeing, there's 9 other times where it doesn't work, where things bounce back. And in leap long call positions, I'd much rather dollar cost average and increase my risk that way than spend more money on long puts. I collar trade. Right now, it's very fuzzy. It seems to me companies are not being given the benefit of the doubt. They're just not. So how long can I make up some of the downward movement so that when companies do get the benefit of the doubt, I can participate in that upswing? Well, Kevin, can't you get in then? Well, yes, I can. But one of the neat, God honest truths that I can tell you, we've never missed an up day in Hurley Investments. We haven't. We've never missed an up day in Hurley Investments. That means we get to participate in all the down days, but you should look, there are usually more up days by 2 to 1 than there are down days. Everything I do has a mathematical justification. But you know what? Sometimes 2 plus 2 doesn't equal 4. Sometimes 2 plus 2 in the stock market equals 0. So we get to share our experiences with each other to get you through some of the zeros in the stock market, some of the zeros in life. Someone asked the other day, what the heck is a quiet period? A quiet period is usually referred to in a public offering where you can't talk up your stock, you can't make forecasts, you can't make recommendations, you can't say how much money you think you're going to make as the stock comes to market. But more often than not, it's that second paragraph. For publicly traded stocks, the 4 weeks before the close of the business quarter is also known as the quiet period. It's more often known as the 4 weeks to prepare for your earnings call. Corporate insiders are forbidden to speak to the public about their business to avoid tipping certain analysts, journalists, investors, and portfolio managers to an unfair advantage, often to avoid the appearance of insider information, whether real or perceived. What does that include? It includes a 4-week period where companies cannot front run or purchase their shares of stock to get an advantage over people because they know what their earnings are going to be. They get an advantage over analysts, journalists, investors, portfolio managers, or the retail traders. A quiet set period of time is in which the company's management and marketing teams cannot share opinions and additional information about the firm. It's to preserve the objectivity and the avoidance of appearance of a company, providing insider information to select investors within their own company. That's not listed there, probably should be. It's a time period where they can't take advantage of knowing they're going to beat their earnings when everyone else doesn't. They can't take advantage of purchasing their stock at a lower price to then give away to employees because they know what the results are going to be versus those of us that do not. So for the person that asked about what a quiet period is, here is the example. Here's what it is. It's also the reasons why, for the most part, people have the opportunity to buy stock cheaply before they have a good earnings. It's where that little phrase comes from. It's kind of shocking in the stock market when everything goes on sale, yet people run out of the store. Come on, you dummies. Well, Kevin, if it goes on sale, I could risk losing money. It's the stock market. You shouldn't be in the stock market if you can't risk losing money. You should be in an annuity. I'll put you in one. The beauty of what we do, let's make up some of the downward movement. Sometimes we don't make up any of the downward movement, but if it gets us through a 20% drop and a 20% rebound, and it gives us peace of mind during that time period, I'm okay with that. If you're not okay with it, this is not the place for you to be. Interesting conversation. I realized I did it. Steve understands I do it. I have not done a good job of explaining it. So on Monday, my commentary is going to be involved explaining what do I do when I make up some money on the way down, but I can't pick up 100 shares. What does that money go? What does it do? Does it just lower the cost basis? Do I buy maybe a couple leap contracts or at least one so I'm picking up something that makes more money to the upside with that money made on a long put? Am I saving some money for the next purchase of puts? As I had a conversation with some, I realized that's probably something I haven't shared with you guys for years. So Monday commentary is, what do I do if I only make up something on the way down, not a full 100 shares or so forth? I'm going to show you my mindset or share with you my mindset there. Very interesting article. I think I've shared this already, but investors should brace for a wild earnings season, expect little guidance for what's ahead. The short answer is, I said it's going to be rough. It's going to be rough. I haven't seen yet I just haven't seen this forgiveness that the people are talking about on the talking heads on TV. I don't know where this forgiveness, this earnings forgiveness is right now, but those S&P estimates scare me. They really do scare me. And I hope there's some big conspiracy theory for this COVID-19 that once whoever becomes elected in November, all of a sudden it starts to go away. I know that's kind of foolish to say because you can't just make the flu or pneumonia go away. But I hope in some way, shape, or form that COVID-19 has taught each other how to care more about each other than we have in the past. It's bringing families back home together. It's killing small business. But I hope it's allowing small business to regroup to make another run at their businesses when we're through this. I hope COVID-19, as retarded as it is to wear a mask, and if you want to question me on that, I'll email you a picture of what people wear by way that people that work with viruses all the time, deadly viruses, what they wear versus thinking a mask is really protecting you. I think it's retarded. But I'm willing to wear a mask if it's going to help someone else feel more comfortable or better. I hope this resets our stock market. I honestly would love to see another 35% drop. We've seen it once. I've got points that I can count on. Points as we fall below, I know where to add more protection. I would love to see another 35% drop and rebound at the end of the year so we have a flat to slightly down year. Man, that would so prep us for an amazing 2021. I'm interested in seeing the worst the stock market has to give us because we have processes in place to take advantage of it, which will make us stronger after the crash, after things recover, knowing that there is no timetable, but the process that we have in place make us stronger, richer, and better off on the back end. With that said, are there any questions today that you guys would like to ask me that I can, in some way, shape, or form, give an answer to? And let me take a quick peek to see who is here. And Rich, you need to make a quick text out to Jim, and I'm going to do so as well. Jim was the one that asked about this quiet period, so I'm pretty much doing that for him. And I'm going to make sure that between you and I, he gets to this recording. I'll probably email it to both of you so that he'll better understand what that quiet period is and how he needs to look at that period before earnings. All right, I do not see any questions coming in. With that said, guys, have a wonderful weekend. Have a wonderful week. I will get this posted here this afternoon sometime. And Rich, I'm going to email it to you and Jim so Jim and Jackie can hear this one. And guys, let's all stand up stronger. When we get knocked down, let's help each other up. Let's find ways to stand up stronger after market crashes, to find ways to stand up stronger after personal crashes, COVID-19 crashes, family suicides. I mean, God, there's so much ugly crap out there. Let's focus where the positives are instead of getting buried underneath all the crap. Guys, take care. Have a wonderful day. Look forward to seeing you on Monday. Hold me to the fact I want to show you what we do with money that we made from those long puts, even if it is only something, not the 100 shares. And I'll see you on Monday evening. Talk to you later. Bye-bye.